All right, what is up, YouTube? We're back bright and early. So, I would like to say my results for April. I couldn't get, any positive, or I would say, majority were negative trades, or, I was down at least like maybe like 1% a day or something like that. And I'll probably recover it. But for the month, I finished down about 5%. There's not really a big loss to me since we are going for that 100% growth model. So at the end of the year, I will show my results. I will show the dollar amount that I have actually made. This won't be just a percentage basis type of videos that I will show you guys. So I will show you guys the actual results and the actual dollar amount that I have actually made once the year is getting close to end, or maybe once we get halfway into the year, which is approaching very quickly. So as we see, the NASDAQ is definitely gaining some strength here. Let me go ahead and switch my screen, and we're definitely going to dive into what we always see. So like I said, we're going to talk about the portfolio, and then we're going to jump straight into the video. We see Google definitely taking off, buyers definitely out of the roof. Let's go ahead and break down the portfolio. If it can load. All right, so we see we're up in APC. Like I said, definitely oversold. I'm looking for it to break 57. My goal for this was to buy shares only if it goes below, or only if it's below $57. So that's that's what's been holding me for actually adding this to my account, is because shares are trading at $57. When shares are trading at 55, I was watching. I was like, okay, I won't touch it if it goes past 57. But it's definitely coming down now, and it looks to become oversold. We see that it is reporting earnings soon, so we should check on that. We see that Athena Health is definitely down, but remember, we're long-term view on it. It definitely missed some sales, but we're definitely going to be optimistic for the year, and hopefully they can actually show us a beat. Berkshire Hathaway, like I said, we're long-term 177, 180, $200. This is a $200 stock, to be honest with you. We see Chesapeake, like we said, bullish on oil, even though the oil cycle is kind of violating that trend there, the uptrend for oil. Also, we have, this is the penny stock. Like I said, this is what happens when you invest in those sub-zero plays. Honeywell, definitely a stock that's long-term. We see we're up about $300 on it. Lululemon, like I said, we're turning negative on the trade. It was becoming to catch some bids here and there, but now the retail sector is definitely falling down once again. PLX, we see that once you invest in a penny stock and you kind of get trapped into that, that share, you get trapped into the company, and you're waiting for for it to bid back up again, or waiting for that promoter to actually show a bid for the stock, and now you're getting hurt. So we see Starbucks. This is definitely an added position that I do have in my account currently. I bought shares around 59.24. I was going to add today, but I definitely traded the stock. We're going to talk about that as well. SPU is definitely another pump and dump. We want to see what's happening, if we invest in pump and dumps. And this is definitely UWT. Like I said, it has it's very volatile. It does go on huge swings. So we may be down $1,000 one day, or we may be up $500 the next day. So I know it's not the risk reward is definitely not there, but we have a long-term view that oil is going to go to $60. So that's typically how I look at it, and this is what's holding me back for going ahead and buy APC, because APC needs to come down below that $57 level before I can actually buy it, because I'm thinking that APC is an actual stock that's worth over $60. So we'll definitely see if that's justified with the earnings, because like I said, these stocks, they build their way up to break all-time highs on good earnings results, or on good news. So let's go ahead and dive into it. So we see Apple and Facebook are definitely reporting pretty soon. We see Apple is definitely getting a huge bid. So this is the part where you might want to take profits here. But last time I took profits right around 120, and I definitely I was actually looking at my orders, and I had a stop loss at 121. So that's typically what kicked me out of the trade. But I was definitely looking to hold Apple long term, but I want to take gains. Now, it might be time for people that that bought at 120 or 130 or something, to go ahead and take gains, because people are still wondering if Apple falls here, because on just a slight of bad news, since the trade is so crowded, or the investment is so crowded, the smallest amount of bad news can definitely turn the stock red, and we might see a gap down like we've seen before, because people are looking for reasons to go ahead and sell shares, and just a bit of negative news can actually bring them to that tipping point to actually sell shares. So let's go ahead and check out Facebook. Facebook is definitely impressing me. So if Facebook, does really good, I have no problem with, buying shares, but I will not buy Facebook at an all-time high. That's definitely not what you're supposed, that's definitely not what you're supposed to do. You're supposed to wait for a pullback, and once a pullback comes, that's exactly when you start to add on your position, and definitely add, or if the stock actually gets a sell-off, or if the market gets a sell-off altogether. So Facebook is definitely, hitting that 150 target, 150, 180. Apple is getting close to 150, 150, 180. That's typically how we look at these stock prices. So Facebook is $180 stock. Apple is getting close to hitting that $150 price target. If Apple can hit that $150 price target, the next price target for it will be $180 along with Facebook. So that's typically how we look at stocks. So I'm not sure why the Facebook chart is definitely not loading up here, but everybody's definitely jumping into crowded trades. And this is typically what we do. We want to be aware of. So if a trade is definitely getting crowded, we definitely want to eliminate some exposure. I don't want to say eliminate all your exposure to the trade, but we definitely want to eliminate some exposure, because, like I said, on just a small amount of bad news, the stock can definitely turn negative, and people will look for some reason to definitely sell the stock. So we can check out Adobe. I'm not really sure why the connection is definitely showing that it's slowed down, because we want to get into payables after I show you guys this chart. Let's see what's going on here. Not even sure. Seems like we have really slow data coming through here. School's Wi-Fi, so bear with me, guys. Okay, let's see if we get Facebook in here. Okay, we have Facebook definitely jumping off the chart here. Overbought by far. We see that RSI is definitely hitting above 75, so we definitely want to back off of that trade. And let's go ahead and check out the XLK. This is definitely where you want to be if you want to eliminate that single stock risk exposure. So let's go ahead and check that out as well. So it's definitely kind of sucky right now, because the internet connection is definitely lagging a bit here. I guess this is what my tuition pays for, I guess. Okay, we're definitely going to open up a trade on Boeing. I definitely see that, it's at $180. So we're going to probably open up a trade here. Let's see. Oh, wait, PP, Boeing. Okay. I'm trying to see. Okay. We see Boeing is about to hit that daily moving average line. Now, let's go ahead and open up a trade for Boeing, because I do believe Boeing will definitely be a $200 stock later on. Like I said, these price targets are definitely hitting for us. So 120, 150, 180. Now the next step is $200. So let's go ahead and open up about 200 shares right here for Boeing. And that's about 8 limit orders. So since this is simulated trading, we don't want to fool with any kind of limit orders. We definitely want to just go ahead for market buy. So definitely, if you're feeling confident about the stock definitely going up, this is definitely a time for you to go ahead and press market buy. Simply because is it actually going to fill? The hell is that? Has a limit? The hell is that? Okay, 173. I'm trying to see what is going on here. Not sure why the order's not going through here. Having all kind of problems here. Okay, so anyway, like I was saying, before I was, before the internet started lagging or doing whatever it wants to do. Okay. Okay. All right. So what we need to see here is that we need to see that stocks are looking to be uh, bought. So we see that. Let's check out APC. APC just now broke below 57. So this is typically, where it definitely gets interesting for me. We see that, we have a position in APC like it right here, and I will definitely, I would definitely want to add below 57, like I said before, because I do believe the stock will go past $60. But what we need to see is that we need to see a strong earnings report, or we need to see some kind of, growth that is going on here, because, you've seen Exxon definitely showing a double of profits that they did last year. And that's simply because oil prices were higher and gas prices were higher. So people are thinking that, the oil analysts are definitely being too hard on oil and gas companies, because they think that they set the bar too high. So we'll definitely check this out, and this will be another company that will report, another big company that will report, and we'll see if it actually has, a negative impact on the rest of the way analysts look at oil stocks. So we'll wait on that. ExxonMobil, see ExxonMobil commercials every time I turn on TV, kind of irritating. We see it bottom the support at $80. 82 is definitely where it's trading at now. Let's, if we have a bullish view on, the market, and let's say if we think the Nasdaq is definitely going to keep running, we might want to open up a trade in the T triple Q, and let's see if we can, actually get some shares filled right here. We're definitely going to open up a market order. Okay, we got a market order at 97.30, and remember 95, 100, 100, 105, 105, 110, and definitely you can look at it like 90, 120, 130, or 150, 180 like that. But I know, they have had to split this before, because it has become, it's become too expensive, because, the Nasdaq, continues to show growth, and since this ETF definitely tracks the growth at an amplified level, it does catch up to the ETF that does track the Nasdaq. So this definitely lets you know that the bulls are definitely in charge of the Nasdaq, and these technology stocks are going to keep pushing the Nasdaq higher. Video game stocks are definitely going to keep pushing the Nasdaq higher. And as we see here, the selling made, I guess it doesn't apply for Nasdaq stocks, because right now Nasdaq is definitely running, and it doesn't look to slow down for the year. And it looks like this might be the strongest index that we have throughout the year. And we see that Trump is definitely making a speech right now. That might have, some impact on the market as well. We see Twilio. We want to see Twilio report, some good numbers. We see, like I said, is going to approach that 35 handle. And what, the earnings will have to show is that if this, if Twilio shows that it has a positive gain, that lets you know that the startup is now actually becoming profitable. So it lets us know that once 35 hits, the stock goes higher than 35, because that handle is what you have to break across if you want to show profits. The stock's gonna need to break across 35, and 35 leads to 40, 40, 50, 50. Like I said, we keep going with these increments, or we can say 30, 60, 90, 120, and we can keep going like that if you have a long-term view on this. But this only only if you have a long-term view on Twilio. Twilio is definitely, a company that you want to look for a long-term. Simply, it is, it is a startup, and we're definitely seeing that, the startup business definitely become profitable each and every day. So we see that options are definitely, looking. Let's see, Twilio. People are thinking that the price is going to move for about 8%. So 8% either way. So there's going to be some pretty, there's going to be some heavy movement to the downside or upside. So a price movement of about 8.1%. This is definitely protecting, who's ever in the stock long term. They definitely want to have some protection on the stock if it does, if it does go down. So this is typically what they do for options, or options could be another way for you to, not trade stocks, or, get rid of that single stock exposure. It's also an easy way for you to actually do order over 100% each and every week if you can actually, get the options right. So that's all I have for you guys. Watch out for those growth names. If we get any growth name on a pullback, we definitely want to check that out. We see Home Depot. Home Depot's price target for me is 180. Like I said, we do $30 increments, and since it's a long-term stock, like I said, $30 increments does help me out. And also, this is definitely a home improvement name. A lot of, last year, not a lot of people understood what people are spending their money at. Home Depot was one, that people saw a lot of spending coming in, and this is definitely going to keep beating estimates and definitely keep going higher. So long term, this might be a $200 stock. You might price it, lower than that, or you might price it higher. But for right now, I'm only looking 6 months ahead. I see this thing going to 180, and my price increments are definitely easy. And as you see, they're definitely getting filled every single time that I do set a price target for the stock, because we want to understand where exactly the stock is going before we actually buy the stock. So if it's a growth name, we use $30 increments, or if it's a slow growth name, we definitely want to use smaller increments. So actually be humble and price or look for perfect price targets or realistic price targets for the stock. So we see it started at November 119, now it's at 156. This is definitely a short amount of time for the stock to definitely run up so much and show bullish sentiment. But for right now, we're definitely going to keep an eye on it. You know what? We can go ahead and buy some shares right here, market order, because we definitely are bullish on Home Depot, because Home Depot is definitely a company that you really want to like for a long-term view. And we got filled 54.93. I know it's overbought, but if we have a investment mindset, we don't care what price we buy it at. But I know you guys, you might feel comfortable buying when it's oversold or overbought or whatever the daily moving average is. But if you have a long-term view on it, it really doesn't matter where you buy the stock at, honestly. So I know a lot of people don't promote that, but that's typically how how you should look at a stock. It really doesn't matter where you buy it as long as you have a long-term view on the stock. So a lot of people might look to save, $3 or $4, but what's that if you're making, $100 a share or maybe $50 a share if you have a long-term view on it? So that's another way to view stocks. So that's all I have for you guys. I know, I should have added more, but right now the market is definitely breaking out. Oh yeah, let's talk about the XIV before I go. What we're going to notice here is that the XIV just broke out. And what I say, the XIV is going to gap up or gap down. We see a gap up in price. A gap up in price, and now we're sitting on old resistance. Now old resistance becomes support. So support levels are definitely right here. And, the market might have somewhat of a pullback if we get that tax vote and, people vote no. So, we're still on the fence about that tax vote. This is why, I'm still skeptical about, having my money, 70% invested in the market just yet, because, we have to see some actual physical results from this president, and we have not seen that yet, other than executive orders. So that's another thing you want to look at when you are looking to invest long term. So that's all I have for you guys. Take care. Remember, watch out for the VIX, because that is almost just about to print a single dollar handle. And if you aren't aware of what I'm talking about, definitely look up TVIX, look up the UVXY, and definitely check out those. So take care, guys.